Hello everybody, we will make a start. It's back. The, what do we call this? The weekly recap and the market outlook for next week. So I haven't done this for a few weeks now because of summer holidays and all of that, but back into it today after the payrolls. So if you haven't seen these before, we do a quick look ahead to the major announcements to watch next week, and then we jump into the platform and take a look at what's going on in the markets. I must admit, there are only two markets that I care about at the moment. That's the S&P 500 and the dollar index. So those are my sort of hot markets to keep an eye on. We'll talk about those when we get into it. We had the payrolls, of course, an hour ago, the monthly release of US jobs data. Market was expecting, I think, about 300,000 jobs to be added in the last month, and it came in at 315, so pretty much as expected. Anyway, let's get the housekeeping out of the way, then we'll make a start. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing your money rapidly due to leverage. 78.9% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, there we go. Let's have a look at next week. There's a lot going on next week again. I think it's good to get into September now because markets will get perhaps back to more normal trading. I don't know, summer can always be a bit strange because of thin volumes and stuff, but we're now into September, and I think we'll see markets. I don't know what difference it will make to volatility, but at least normal volumes you'd have thought. But looking ahead to next week, Tuesday, Australian interest rate decision, early hours of the morning. Clearly, interest rates, big one at the moment because everything is all about inflation and everything else. Then Wednesday, European GDP, how well or not is the European economy doing? I don't know if you saw the video we put up yesterday on the channel, so something of a coup. We had a video with Daniel Lacalle, European economist, and Nigel Farage debating whether the euro is going to crash further. So if you haven't seen that, that's quite an interesting one to watch. If you go on the channel, you can watch that. So EU GDP next Wednesday, Canadian interest rate next Wednesday, interest rates again, inflation, and Japanese GDP. How well or not is the Japanese economy doing? Thursday, European interest rates. It's a massive week for interest rates next week. So European interest rate decision next week. The European Central Bank have been behind the curve on interest rates. Central banks as a whole have been too slow, I think. But Europeans have been particularly slow. So an interest rate decision from them next week. And then if that wasn't enough, Friday, Chinese inflation data. That would be interesting because, it is, as we know, it is all about inflation at the moment in markets. I tell you what I think is interesting. There is so much bad news, negative forecasts coming out. We had Citigroup, I think, forecasting, was it 21% inflation for the UK next year? Goldman Sachs came out and said 22% inflation for the UK next year. Clearly, we're all worried about the cost of living crisis, price caps on energy bills, all sorts of speculation as to how high energy bills will be in 2023. I do wonder if we are at peak fear, peak bad news for inflation and energy costs. And I do wonder if we will see the peak in inflation over the next couple of months. Let's see. I just think when the news gets as extreme as I think we are at the moment, that's precisely the time when markets go the other way. So I do wonder if things don't end up being quite as bad as everyone is forecasting into next year. Let's see. Let's see what happens. Contact details and all that stuff. Obviously, to find out more about the company, go to Capital.com. any questions. And I do have some outstanding questions I've got to reply to, so apologies for that. I have been away. I'll get around to it over the weekend and early next week. But any questions, david.jones@capital.com. On Twitter, you can follow me at Jones the Markets. You can find out more about my trading approach and the trading course I run on jonesthemarkets.com, and follow Capital.com on YouTube, Twitter, and Facebook. That's it. I've seen a few things in the comments. I'm not going to be at Capital in a couple of weeks' time, so there's only a couple more of these things left with me doing them. Anyway, I have enjoyed doing them. But if you follow me on Twitter and stuff like that, you'll be able to keep up with what I'll be doing after that. So jonesthemarkets.com and Jones the Markets on Twitter. So, but I do enjoy doing these. It's a good run through all sorts of different markets. Right, let's start off with the S&P. Stock markets. I think stock markets are interesting at the moment. And for me, the market I watch is the S&P 500. What is interesting for me about stock markets at the moment, we know what sort of year it's been. We've seen the market, the S&P came into this year around 4,800. The market has traded down to 3650. We haven't seen rallies being sustainable. They've been knocked back. However, this rally on the S&P since the June lows into the August highs was a major recovery, much more significant, I think, than any of the recoveries we've seen this year. So the market's gone from 3650, let's call it, to 4,300, 20% pretty much, almost, 20% run off those lows before it ran out of steam again over the next couple of weeks. And this is why I think, for me anyway, this is a market that I watch every day, because I think the test now, today is only one day and we've had the payrolls. Are we going to see a higher low for the S&P? And are we going to see this market has now shaken off the sell-off that we've been in all this year? So for me, I am still short in my own account. I'm still short the S&P, but I've got quite a tight stop on it, and I'm quite ready to start switching around and thinking about buying the dips, depending on what happens over the next few days or so. It'd be interesting to see if yesterday that low at 3,900 is an important short-term low. Let's see what happens today. I think if we don't take out 3,900 today, that's another positive step. So perhaps, and it was an important low, short-term low, back at the end of July. So for me, if markets don't fall today, I would absolutely, from a short-term point of view, looking to be a buyer with a stop the other side of 3,900. So that's what I'd be looking at for later today and into next week. So I think it's really interesting what's going on in stock markets because this bounce has been so strong. Of course, it wasn't just going to bounce all the way back up to the all-time highs. The test was, right, when it corrects, how far does it correct? And do we see the buyers come back in? I've got to sneeze, sorry. Oh, it's gone. What's also interesting, the RSI, for those of you who are fans of the RSI, it went oversold over the last couple of days. The last time it was oversold was down here at the June lows. So that does stack up with, I've seen somebody mention Fibonacci levels. Let's put a Fibonacci level on, because you're right, I think Fibonacci levels are utter rubbish. But no, you're saying it has hit a Fibonacci level. Let's put it on. Oh, you see, I don't even know how to draw Fibonacci levels. I can see, hang on a second. Every platform does it slightly differently, doesn't it? So I think I've got to take it from the highs down to the lows, is it? Something like that? So is it that level there we're saying it hit? Anyway, whatever. So it's hit the fib level, according to Kevin, which is fair enough. But 3,900, big level, 3,900. So yeah, for me, perhaps we'll see stock markets have a recovery next week. That 3,900 level has to hold. So like I say, with stock markets, the only market I watch regularly is the S&P. But here's the NASDAQ. I know that the NASDAQ is the most popular stock market index on our platform. Quite often it is also the most popular market, full stop, in terms of daily trades. Similar moves in the NASDAQ. You could almost argue, if you're a fan of trend lines, we've had the trend. Let's flip this over to perhaps a 4-hour chart. We've had the trend off the June lows, bang, 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 bang. The market's come back and it's faffing around and holding around the trend line. So for me, the same with the NASDAQ, today into next week. Is that low we saw yesterday in the Nasdaq, 12,000, give or take a few points, an important short-term low? Let's see what happens. If it goes crashing through that level today, then I just have to be a bit more patient and see what happens next week. But I definitely lean at the moment. We're going to see stock markets make a higher low. We're going to see further recovery. Let's see. Let's see what happens. So that's the Nasdaq and the S&P. Ftse, UK market, again doing its own thing as usual. Ftse has outperformed US stock markets this year, has not been hit anywhere near as hard. It lagged on the way up in the recovery during the pandemic, in the shutdowns, the lockdowns. So it didn't perform as well on the way up, hasn't been hit as hard on the way down. This is what the FTSE's done today. I mean, look at that. It was pretty sideways going back to the end of last year. So we're in this wide sideways range for the FTSE. It's not a market I look at during the week at all. So there's no interest for me in the FTSE. But, lots of support at 7,000. We've had a low yesterday ahead of 7,100. Again, if you thought that markets were going to bounce back from here, it's an interesting trade with a stop loss to the other side of 7,100. But clearly, a lot of this will be dictated by what happens with US markets. German market. I think the German market is an interesting one because it does do a bit more of its own thing. And actually, there is, if I think these lows in March are important, and I think they are. This is the post-Russian invasion of Ukraine low around about 12.4. Market comes back to it in July, 12.4, holds, rallies up to 14,000. Yesterday, the market trades back to 12.6, so we've come within a couple of hundred points of that low. It's really an important level for the DAX, 12.4, or it has been over the last 5 or 6 months or so. So again, an argument. For me, I'd be a buyer of the DAX if I had to do a trade on the DAX with a stop the other side of 12,400. If 12,400 breaks, we're on new lows for the year, and it looks a bit more bearish. But you can see just how well that level has held up. Let's have a look at the old the Nikkei, so the Japanese index, the Japan 225. A bit sideways actually. We had been in this downtrend for the Nikkei. It did have quite a run here, didn't it? It's had a bit of a run out to 29.2. I think that's a hard market to call. So we did actually push up to the highs for the year in August, the Nikkei. So for me, I don't know. What would you do? I suppose an aggressive trade here. An aggressive trade. Be a buyer at 27.7 with a stop underneath the late July low at 27.4. Could be an aggressive trade on the Nikkei. Looking to see if we're going to have a look and challenge these old highs, 29.2. But as ever, the reason I watch the S&P, because it is the most important stock market in the world, US stock market, and the rest, and it definitely has at least some pull as to what happens with other world markets. So for me, it's the S&P I watch. That'll be the one I'll be watching, and let's see if those old lows hold. Right, that's stock market. So interesting. Perhaps we're getting to the point where the worst is over. Now the dollar index. I often say this, absolutely my second favourite market after the S&P, if not my favourite market. Great market to watch for FX. It's the dollar against a basket of other currencies, the euro, the yen, the pound, the Canadian dollar, the Swedish, the Swiss, blah, 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 blah. And yesterday, once again, I've been banging on about this trend in the dollar index, I think for more than a year now. Once again, the dollar index yesterday just about scraped out to a fresh 20-year high. I don't know how much data we've got. I don't think we've got 20 years worth, but let's have a quick look. No, we haven't. But basically, these are the best levels again since since the year 2002. So dollar index trends all over the place. For me, I've been long the dollar index. I've talked about it for my own trading. I've been long, I've always had at least one position long in the dollar index since February of 2021. I've got 2 running at the moment. Let's see. The breakout is normally a positive sign. Clearly still fears about inflation, fears about the world economy. The dollar is acting as a safe haven, as well as being something of a hedge against inflation. You could, of course, make the argument, well, surely it's overstretched, the dollar up here, but, it keeps on going up. I mean, what's it up this year? So the dollar index started ended 2021 at just below 96, and we're at 109 today. So it's up 15% pretty much this year, the US dollar. Very overbought on the old RSI, but the market keeps going up. So for me, absolutely a buyer into strength and a buyer of pullbacks on the dollar index. And I'd only start to change my mind if we lost this old 104 support from August. But we do have a longer term trend coming in, down at 100. So, the dollar is a really interesting one to watch when we can see what our market's thinking about inflation and all of that sort of stuff. And, dollar yen, of course, moved pretty similar. Dollar yen moved out to fresh, multi-year highs again. There we go. Dollar yen today, actually, again today, has moved out to its best levels since whenever, 2000, something like that. Or is it even the late 90s? I don't know. But the trend is up. We know the trend is up, don't we? The trend is up. So for me, absolutely looking to be a buyer of dips. And of course, because the trend is up, what are most people doing? They are short, aren't they? There we go. Because people can't go with the trend. Interesting. 52.48, the Nigel Farage's favourite number combination. But yeah, clearly, great performing US dollar. Euro dollar, I haven't looked at that for a couple of days, but euro dollar, has been flipping around parity, below parity. There we go. It's been fairly uneventful, sort of 10 days or so, but it does, it has again nudged to its worst levels in, again, probably 20 years or however many years it is since we last saw the euro below 1 to the US dollar. So dollar strength across the board. Right, we've done all that. Let's have a look at gold and silver. Let's have a look at gold. So, of course, if we're seeing dollar strength, what will we have seen in gold? We'll have seen weakness in the gold price. So we did see gold, trade down yesterday, again below 1700. I do think gold is interesting. I think last year was a boring year for gold. I do think it's interesting down here. So I would say, I think there's a couple of things on gold. First of all, for me, the trend since March is down. So we are now, 5 months into this trend, and the trend is still down. However, for me as well, going back to April of 2020, 1660, let's call it 1650, has been an important floor for the price of gold. It's stopped the gold price slipping any further. So there is absolutely the argument for being a buyer of gold below 1700, which is where we saw it trade yesterday. However, and I would down here probably lean to be thinking about buying rather than selling. But I think again it's a case of being patient and waiting for this downtrend to sort itself out. So I think there'll be plenty of opportunity if this downtrend is going to end, and it's still in place now, to be a buyer of gold. So I think it's interesting down here, interesting market to watch. Personally, for my own trading, I'm not doing anything. I don't know if there's a trade on this account. Okay, long, short. Oh, short. So this account, short gold since the 4th of August. Oh, up at 1780. Fair enough. Let's move that stop loss to break even because I always forget to move the stops. So I've been short gold since the 4th of August. So that would have been on the last bounce up. When was that? 4th of August in here. So it's when we last did a video on gold, clearly. So the market did push a bit higher and has rolled over. I do wonder if we'll get a bit of a bounce going into next week, particularly, of course, if we see some of that US dollar strength coming off. Silver, I think I often say it, I hate silver, never trade it myself. I really think for me, it's a real scrappy market, silver. But I think I'm long silver in this account at the moment, but the trend is down. Only yesterday in silver, the price of silver touched its lowest levels. So we touched $17.50 pretty much, lowest levels since June 2020. So that trend is up. I bought silver in the last video we did, wondering if we were going to see something of a recovery. I've got a stop in place. It hasn't been taken out yet, as far as I know. Got a stop in at 17.50. Bought it at 19. The market's at 18. Let's see what happens. Like I say, for me, I really don't like silver as a market to trade because it starts these trends and then it just reverses them really quickly. But the trend for now in silver is down. I wonder if we get an oversold bounce from down here in silver. Again, if we see that US dollar perhaps weaken from these 20-year highs into next week, we could see something of a bounce in the likes of silver and gold. Let's see what happens. So silver did that. Let's have a look at oil and natural gas. Look at oil first. Now oil has been boring, not massively boring, but a lot more boring than it has been, obviously, at the beginning of the year. There is an argument, absolutely an argument, for being a buyer of oil here. That's what I would do. Maybe that's the trade we'll do. We haven't done a trade yet today. So for me, I would make the argument. The trend for oil is still up off the April 2020 lows. So off the lows, around 12 quid, $12 cash a barrel. Accelerated away from December last year. Russian invasion of Ukraine, as we know, price of US crude goes above 125. But we've come back and we are sort of tickling around the 90 area, aren't we? And it was a low, short-term low, middle of August, around about 85. Currently trading 88. You could make the argument, well, if the price of oil is going to bounce from anywhere, from a trend technical analysis point of view, this is the area. So I'm going to do a trade. I'm going to trade on oil. So 85 was the low. Give it a bit of wiggle room because it can be a bit crazy. Let's go 83 for a stop in oil. So I'm going to put a stop on at 83. I only risk 100 quid on these trades on the live stream. So that is 23 barrels. There we go. Buy 23 barrels of oil at 88. Stop at 83. Risk is 100. So I quite like that trade because we're going with the bigger trend. It's a bit sideways over the last month, pretty much. Let's see what happens. Let's see if do we have a bit of a push in September back up to $100 a barrel for oil. Let's see how that turns out. I'm trying to think if there's a lot of old trades we did in live streams that have done quite well actually. There's that one, the Australian trade, Australian stock market trade. Is there a really big winner from a live stream that we did? This one, Euro Aussie from the 24th of June. For 100 quid risk, it's made 330 quid. I'm trying to think, is there any other big standout? I think a lot of the trades in here are actually from live streams. Netflix trade, 1st of July, bought at 178, bit of bottom fishing. 227, should move the stop on that as well. Let's move the stop to 200 on that. Nvidia, short Nvidia from the end of July. That's done all right as well. Silver trade not doing too well. And that Vale, well, that's losing money, 30 quid. Okay, so oil's interesting, bit quieter, but perhaps there's a bounce here. Natural gas, this is a market that has continued with its volatility this year. I am, in this account, the account we use for the videos, I'm short natural gas. I think I'm still short. Yeah, I'm short. It's underwater. It's a bit underwater. It's come back a bit this week. I've been short since the 11th of August. Short at 8.50 with a stop at 10. Stop at $10. Came very close to trading to 10 natural gas, but didn't. Look at that. Just about missed getting stopped out in natural gas. And I do wonder, the reason I did the trade back then, right, the big trend for natural gas, absolutely up, going back to June 2020. We're a long way away from that trend line, though. That trend line is coming in around about $4.50. I wondered, whenever I did that video, and it'll be on the channel, you can watch it from whenever it was, I'm guessing beginning of August, was it going to struggle? If we were looking, I was looking at it up here, thinking, right, is it going to struggle again, natural gas, in this 8.50 to 9.50 area? And it's had that poke out to 10, but it's come off it really quickly. So for me, on natural gas, the purist trade, absolutely be a buyer of dips, because the big trend is up. The aggressive trade, the sensible trade, probably do nothing. The aggressive trade, think about selling short with stops above 10. And I do wonder if it goes through 10, will it take off like a rocket? But I also wonder, with all the fear around in the moment, is this when the market reverses? There was that story this week, if you follow gas markets, I'm sure you saw it. We've seen big sell-offs. Here we go. European gas fluctuates. So that wasn't the story I was looking for. The story I was looking for was they were all building up their stockpiles, weren't they? Here we go. It's this story. European energy slumps as German gas stores fill ahead of target. So German stockpiles were building up, and I think other European countries were building up. We've seen big drops in European natural gas compared to the US natural gas that we see. I think they were up 40% last week and dropped 20% on Monday. So massive volatility in the European natural gas market. I just wonder, are we going to see a bit of a sell-off in these markets? So that's how I'm positioned in US natural gas. Let's see what happens. Right, we've done oil, natural gas, precious metals. Should we have a quick look at crypto? The sad world of crypto. It's an interesting stat actually. We produce a report every quarter on what our clients are doing. And because I work in the UK, we can't talk about crypto in written reports because you're not allowed to trade crypto using leverage in the UK. But in the global numbers, if you looked at trading activity of clients, this is off the top of my head, so the numbers might not be accurate, but trading activity for clients just over a year ago, about 56% of trades placed with us were on crypto. In the current quarter, which doesn't end till the end of September, in the current quarter, it was 56% over a year ago. Only 15% of client trades are crypto globally with us. And that shows, I think, which what many of us know, crypto traders, your average crypto trader is quite naive, loves crypto and trading it when the market's going up. When the market falls, they all desert it. Okay, so here we are on Bitcoin trading at 20,000 and a bit of change, 20,300. For me, the big trend on Bitcoin, or the trend since November last year, is absolutely down. I've been in no hurry to do anything on Bitcoin, but if we were trying to build a positive case, we have the low set in June at 17.5 has not been taken out. So are we going to see this downtrend end? I think a bit like gold, I'd definitely be patient here. I'd be in no rush to do anything just yet. But I would be wondering, are we going to see, particularly again, if you see the US dollar coming off, if people start to embrace risk again, do we see perhaps something of a recovery in the fortunes of the likes of Bitcoin? I think, don't hold your breath for 68,000 anytime soon, but be interesting to see if in the last quarter we see a bit of a recovery. So for me, 17,500 is an interesting floor. I'll be waiting to see what happens if this downtrend can be broken. So a quick look at Ethereum. No idea what's been happening with Ethereum. Never look at it. I'm guessing similar sort of moves to Bitcoin. Let's have a look. There we go. Trend is still down in Ethereum, but again, this has rallied really strongly off that June low. June low was 880. The market's doubled. Well, not quite doubled, but almost doubled. We're at 1630 at the moment. So I think it's going to be an interesting last quarter of the year for the crypto market. Let's see what happens. But I hardly ever look at these. Maybe once a week I'll have a look at Bitcoin and see what it's doing. So like I say, at the moment, interesting markets for me. The only two markets for me, stock market, S&P. What is going on? Are we going to see 3,900 turn out to be an important low? Or does it actually just plop a bit lower next week? See what happens. Personally, I do wonder if we're going to see a bit more of a recovery from here. So I'm still, even though I am still short in my own account, I am leaning towards thinking about buying the dip here. Let's see what happens. And the dollar index, because that incredible trend in the US dollar, yesterday again moved out to multi-year highs. So for me, still long the US dollar. And let's see what happens. Clearly massively overheated. But you could say that at various points this year. So let's see what happens. I think those are the interesting markets to do next week. Watch next week. Right, I'm going to jump into the questions in a second. Quick reminder, Capital.com, find out more about the company. David.Jones at Capital.com to any questions. At Jones the Markets on Twitter. JonesTheMarkets.com is my website. And follow Capital.com on YouTube, Twitter, and Facebook. Right, let's have a look at some of the comments, and we'll have a look at some of the markets that you want looking at. What do you think about silver? We did silver. Yeah, I will be doing in my. I'm going to work for myself. Is my plan after I'm not here anymore, and I will be doing these. I'm going to need to set up a YouTube channel, obviously, but I will be doing regular market updates like this. Is my plan because I do enjoy doing them. What have we got? The Nifty 50. I must admit, I never look at the Nifty 50, but let's have a look at it. And that's the Indian market, isn't it? India 50. Here we go. So you're saying majorly outperforming global markets and an interesting channel structure that everyone is monitoring. I think that is interesting. We don't have much data. We only got the data for 2022. It's a bit like the Nikkei, actually. So I don't know. What would you do? There's an argument for being a buyer. If you took the view that the recovery from June is absolutely still going, so there's an argument for being a buyer of the Nifty 50, the Indian market. However, we know that 18,000 to 18,400 has been a big problem all this year. So are we buying near the top of the range? So for me, I don't know. I would sit on my hands and wait to see. But absolutely great performance. I'm guessing. I was going to say outperformed, but it hasn't. It's gone up 20% off those lows, which is pretty similar to the S&P and the Nasdaq. So I'm sure there is, again, US markets exerting some impact here. So yeah, absolutely great performance. I would be personally waiting to see what happens with global stock markets. But yeah, interesting market that we don't look at. Aluminium spot. Let's have a look at that. Aluminium spot. Oh, that's come right off, isn't it? That's quite interesting, isn't it? I would probably have bought that and lost money if I'd have been trading that, because we had this great trend in aluminium spot. And then it looked, the aggressive trade here is to be a buyer. If you were going to take the view, maybe this is a trade we'll do now. If I was going to take the view, the trend was down, and then since July, it's sort of gone sideways and it's trying to make a base. I think the aggressive trade here is to be a buyer. And it is an aggressive trade because we don't really have a trend. The trend since July is all a little bit sideways and messy. The low in July was, what was the low? 2,300. We're at 2,295 now. So you could take the view, if you flip this over to an hourly, it absolutely got clobbered, didn't it? I don't know what happened there. Maybe somebody who follows this much more closely than me knows what happened there. You could take the view, we're seeing a bit of a false break below the July low. So an aggressive trade is to be a buyer with a fairly tight stop. What should we do? What should we do on a stop? Let's go 23.60 for a stop. So I'm going to be a buyer. I'm going to take the view, for whatever reason, the market has overshot to the downside. I'm going to go 22.60 on a stop. And I'm going to how much can I buy? Not much, actually. 3. I'm not even sure what it is I'm buying here. 2.5, 2.9, 2.8. So I'm going to buy 2.8. Oh, I can't do that. Oh, let's do 3. We'll do 3 of aluminium at 23.03. Stop at 22.60. So if it lurches another $35 lower, I'll be out. But taking the view that perhaps the market has overshot to the downside here. Let's see. Let's see what happens. So I think that's interesting. For me, if we see it start pushing below 22.80, it doesn't look like a false break anymore. And I think the risk is that perhaps we'll see, potentially a much deeper sell-off in aluminium. Let's see what happens. Copper. I did a video on copper earlier this week. I bought copper in the video earlier this week. Where is it? I left an order in to buy copper. I think it only got filled today, and there was an existing trade on copper. I think that was from one of the live streams. I think copper, someone made a very fair point in the video, that he thought, in the comments, thought I was going against major trends a lot. And I think that's a fair point, and it maybe ties into my bias at the moment. I'm thinking that markets have overreacted pessimistically. And the copper trade was a bit like that. I mean, the copper, it's quite, lots of volatility over the last few years. You could argue we've still got a downtrend in copper. We had this brutal sell-off for about 5 weeks in copper. Saw it bounce back, and over the last week we've had another sell-off. But my trade on copper is taking the view this low from July will not get taken out, or if it does get taken out, then I should come out the trade. So that low isn't at 313. So I bought copper at 340 with a stop at 3 is my trade on copper. So I'm just wondering, has the weakness been overdone? It's a bit more of an in-depth look if you watch the video from Tuesday that I did this week on copper. But for me, I bought it. Again, a bit of an aggressive trade. But I think it's hard at the moment because there are so many markets that do look like this that you think, well, actually, there are strong arguments for being a buyer or a seller. Whereas something like the dollar index, the trend is so strong, to me, I always want to be a buyer on dips or buyer in strength. With copper, I think it's a bit difficult, a bit more difficult. OPEC Plus might cut production early next week. Thanks for that, Richard. That's on the oil market. We'll see. We'll see what happens with that. Oil inventory surplus. OPEC Plus meeting Monday. Okay. That's a big meeting next week for OPEC. What happened to the ARC trade? Actually, I've got no idea. What is that ARC trade? 1st of July. Bought it on the 1st of July. ARC Innovation. I forget about them. Is honestly what happens with these trades. If I do them in a live stream, put a stop in, and then I completely forget about them. So we bought on the 1st of July. I don't think it did a bit, didn't it? It did. Where did it go from? It went up to 53. Absolutely should have moved the stop on that. Wasn't paying attention. Bought them at 41 and they went to 53. Should have never moved the stop, you see. Took the summer off. Wasn't paying attention. Oh, there's that merge for Ethereum, isn't there? I don't understand it, but I know there's one of these big events coming for Ethereum. Yeah. Let's have a look at the VIX. VIX. So we do look at this. I never trade the VIX. You can trade the VIX, obviously, with us. It's the volatility index. Not surprisingly, it has picked up over the last couple of days, or the last week, I should say, as the S&P has weakened, has dropped back a bit today, as we've seen a bounce in the S&P. I mean, for me, extremes in the VIX are interesting, and it's all a bit, for me at the moment, it's all a bit middling, the VIX. So that's the VIX. I don't know. I never trade the thing. So, yeah. What do we think about cannabis stocks? Don't know. I never look at them. Is there a cannabis? There's a cannabis ETF, isn't there? Here we go. Oh, let's look at this. US Cannabis Index. I mean, that looks a bit rubbish to me, to be perfectly honest. We had the excitement back here. So this is the overall index of, I'm guessing, the major cannabis stocks. Loads of excitement back here into 2021. And then, since then, just drifting away. So, yeah. Looks just boring, and the risk is that perhaps it drifts even lower. So for me, there is no reason to get excited about cannabis. I mean, that is just. I mean, the market does just look a bit stoned, doesn't it, over the last year and a half, really, and it's just drifting. So no, it looks really boring, that one, to me. Thanks for that, Gangrene. Thanks for that. Hopefully, you look forward to the live stream that we do next Thursday. Siemens. Fat Dan says Siemens, the German engineering company. Let's have a look at those. Where are they listed? I guess in their European listing, aren't they? Yeah, European listing. It's interesting. So I would say this is another one for me where I would say for me I'd want to be patient, right? So I would make the argument that the trend is still just about down, even though it's had a little look in August, okay, through that trend line, which has been in place all this year, basically, since the first week of Jan. I suppose an aggressive trade, for me, there's an obvious aggressive trade if you wanted to do it, is to be a buyer, take the view that the Siemens stock price is turning round, and put a stop loss the other side of 93 euros, which was the low back here. If it takes out 93, that trend definitely looks to still be in place. For me, I'd rather be a little bit patient, but it's an interesting risk reward. Let's say you had a stop at 90. You got a stop at 90, buy them at 103, 13 risk. 13 risk. If it was going to claw its way back up to perhaps the middle of the range at 136, you've got 23 upside. So I think it's definitely an interesting one to watch. Personally, I'll be a little bit more patient because that trend for me is still down. So let's see what happens. Is Apple a buy? Let's have a look. I would suggest. What do you reckon? I mean, clearly, we've got trends going back years for Apple. I think it is quite hard still for individual stocks at the moment because of everything that's going on with stock markets. Clearly, if markets all suddenly fall off a cliff again in the last 3 months of the year, everything gets hit. I would say, for me, there's definitely, and again, it's maybe an aggressive trade here on Apple. If we go over to the hourly charts, the trend had been up since June with that NASDAQ rally. I probably wouldn't want to be a buyer today. I'd wait to see what happened next week. But if I was a buyer, the closest I would want my stop is probably the other side of 150 or something. So I think, again, it's another one that, depending on what happens to stock markets today, could be interesting to look for a recovery next week. But definitely leaning towards buying rather than selling is what I would say. PayPal. Let's have a look on the daily chart. Oh, it looks. Have I got a trade on PayPal? Hang on a second. Is there a trade on PayPal? No. Okay. I suppose could you make the argument it's the stock's bottomed? I mean, you absolutely could make that argument, couldn't you? You could take. I mean, it's been, where was it? It was, so this time last year, $300. Today, $92. So you could. Yeah, I think that is it. That's another one for me where I would want to be a bit more patient. At the moment, if I was a buyer now, my stop loss would go down here, the other side of 67. That is a long way away. With the stock trading at 92, that's like a 25% stop loss. So for me, I'd rather wait and see. Do we get a bit of a sell-off? Does it hold above these old lows? Blah, blah, blah. So for me, I think it's interesting. Perhaps we are seeing the worst is behind it, but personally, I'd rather be a little bit patient. Lockheed Martin. I don't think we've looked at those, have we? Lockheed. Let's have a look. I mean, it's a bit, for me, it's a little, it's quite scrappy price action, isn't it, over the years? And it's one of those ones, if you look at it, it's sort of halfway up the range for the last 5 months. So so for me, it's a little bit of a coin flip. It doesn't look that interesting to me. For me, I'm a big fan of trends and everything else, and that one doesn't look that interesting. So I don't know. I don't know on that one. What do you think of pound against the dollar? Do you think there's going to be a sterling recovery? It's grim, isn't it? If you're thinking about going to a little Christmas break to New York, it's going to be somewhat expensive, isn't it? Clearly the euro and the pound have both been absolutely mullered by the US dollar. I would say, I would not be a buyer of the pound, but if it's going to rally from anywhere, then we're here, aren't we? We're back to the Corona lows, to the March lows, when the pound traded to, I don't know, what was it? Was it 114? Down at 114, which was the lowest since 1985, I think, from memory. So we're pretty near a 37-year low for the pound against the dollar. If it's going to recover from anywhere, then it's it. And luckily, of course, we've got the prospect, whoever wins, of a fantastic new Prime Minister in the pound, in the UK, who will totally transform the UK economy. So maybe that is the catalyst that turns the pound around. But it's definitely interesting down here. I mean, if it goes below 114, it could be a case of look out below. Can you imagine if the pound is only worth $1? If we ended up there. And I do think, I think if we do see this inflation story or inflation numbers start to cool off, that has to start impacting the US dollar. And perhaps we will then see a recovery in the likes of the pound and the euro. But absolutely, under pressure at the moment, and I think if you're thinking about, so for me, if I was thinking about buying the pound, I think there will be plenty of opportunity to buy the pound when this market actually turns. And let's not forget, it was only yesterday it hit its worst level in more than 2 years. So whenever this market does turn, it's not showing any signs of turning at the moment, but it is really interesting. Down here. Swiss franc against the Hungarian forint. Chuff Huff. How's that one doing? Lovely trend. I think we've looked at that before, haven't we? So for me, absolute buyer of the Swiss franc against the Hungarian. Trend is up. All the usual nonsense. Trend is up. Loads of support just below 400, coming in around 395. Bit of a down day today. Interesting market to watch next week, but for me, absolutely be looking to be a buyer of the Swiss franc against the Hungarian forint based on that one. Games Workshop, GAW, Games Workshop. How are we doing for time? Sorry, what time is it? Hang on a second. Games Workshop Group. I think this is always a popular one, isn't it? With retail investors. I would still be erring on the side of caution, and for me, saying that the trend is still down. You could absolutely make the argument it has broken out of this downtrend, and that is, you can't argue with that because you can see it here. I would just say, for me, these old highs around 80p from whenever it was, March earlier this year, still a bit of a problem. So for me, I wonder if, perhaps we're past the worst, but perhaps it's not going to be that exciting either. Famous last words. So again, for me, it's a bit of a wait and see, the old Games Workshop. Tesla. He seems to have been a bit quiet lately, Mr. Musk, doesn't he? Unless I just haven't been following the news properly. There doesn't seem to be. I don't know what's happening with this Twitter takeover thing. The stock for me, I still be a buyer on dips of Tesla. Okay, it's done the split, hasn't it? I was trying to figure out. I was thinking, hang on, wasn't $600 a big level for Tesla? It's done the share split, hasn't it, Tesla? So for me, if we looked at the last 12 months or so, it's a bit boring. Lots of volatility, no real direction. For me, a buyer on dips, but I'd rather see a deeper dip. So, yeah. It's a little bit stuck in the middle. Tesla, 4th Prime Minister in 6 years. Yeah, it's great, isn't it? We're like the Italians in the late 90s, aren't we? Or the early 2000s. General Motors. General Motors. That is interesting, actually. I'd be a buyer. Trying to go for the recovery on General Motors, I suppose. Because I think, we've broken out the downtrends and we have taken out just about some of these levels on the way up. So I would be a cautious buyer of General Motors. Now, the only question is, where's your stop going to go? For me, I would probably want it down at 30. If I was trying to be in for a big turnaround in General Motors, I don't want to get taken out just in the noise of the market. So for me, my stop would go at below 30. But if you're more aggressive, I think a stop below 35. That's an interesting one. I think that is definitely, we looked at quite a lot of stocks today. I think that's perhaps the most interesting turnaround stock that we've seen. Let's see what happens. Who knows? Ford Motor, copy for Tesla, General Motors, Ford. Let's have a look at Ford Motor. They did really well, didn't they? And then they haven't. So it went from $4 in March 2020 to $26 in Jan of this year. Again, to me, that's one that has absolutely broken out that downtrend. I'd rather sit on my hands and buy a dip. And the risk is we wait for a dip, the dip never happens, blah, 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 the usual. But for me, I'd rather buy a dip, but it does look like the worst is over. I can add the average true range band indicator, but I never look at it. But if you want to see it on the chart, I don't believe in indicators. That's what it boils down to. So I don't have indicators on my charts, and I just think it means it's all just too cluttered. But there you go. There's your ATR, 14-day ATR. I think that if someone is buying AMD, for example, I believe that the S&P is the index to watch. It really worked out for me recently. Fair enough. Occidental Petroleum. Let's have a look at that. Let's come off the old car theme. It's just started chucking it down with rain outside. It's a little weather update. That looks good, doesn't it? I think. So I'm sorry, I'm going to have to get this ATR off because I've not got enough chart room. There we go. Trend. Look at the trend. There we go. So for me, again, Occidental, absolutely the trend is up. We're a long way away from that trend line. That trend line's coming in around 37. The trend is absolutely strong. But do you buy now or do you buy a dip? For me personally, from a risk-reward point of view, I'd rather buy a dip rather than buy up here. But let's see. Let's see what happens. Royal Mail. I'm short since spring, says Postman Pat, appropriate username, but can't seem to break support around 255. Last week revealed foreign buyer interested. Is he the same guy who's trying to buy West Ham? I just remember seeing, I thought that was a strange crossover. But he owns, like you say, a chunk of Royal Mail and is also interested in buying, I think, a chunk of West Ham or West Ham itself. What do you think? I don't know. I think we're seeing almost 250 psychological support. You're saying you're short, which is absolutely fair enough. It did move very briefly today, didn't it, to the low, a new low. It's just about let's assume you're in a profitable trade. The problem always is how much room do you give it to try and make more profit, doesn't it? And it needs to break 250. So for me, I don't know, it's a tricky one. 250 is the level though. If it can break 250, then you'd expect a lot more weakness. But maybe it's a bit of a psychological level. Maybe there's a bit more buying there. I don't know. I don't have a massively strong opinion on that one. Right, Euro Swiss franc, Euro Swiss franc, Euro chuff. I would be a seller of rallies on that. So Euro Swiss franc downtrend since March 2021. Nice run up the last week, but I would treat this like just about every other rally in the euro against the Swiss franc over the last 18 months and assume it's going to run out of steam. Let's do that trade. So the aggressive trade here for me is to not believe the rally. Okay, so I'm not going to believe the rally in Euro Swiss, and I'm going to put my stop loss somewhere above these highs from July. So what was the highs? Oh, let's put it above 1. Let's go above 1 for the stop loss in Euro Swiss. Have I got a trade in Euro Swiss? Yeah, I'm short already. There you go. I'm already short Euro Swiss. Okay, so we went short. That would have been a light since May. Been short since May. All right, we need to move that stop because that stop is absolutely miles away. Let's move that stop to 98.50. There we go. And we'll do a new trade in Euro Swiss with a stop above 1 again. So we'll sell it. Why is it not letting me do a trade now? I don't know why. Sell when prices. All right, where is it? 0.9810, whatever. Close at, we'll put a stop loss just above 1.010. Have I done that right? No. 25. Okay. There we go. And we'll sell 6,000. So selling 6,000. If the price blips up a little bit higher than where we are now, with a stop just above 1. You can see it there. And that risk is, let's do that. So we'll leave that in as a limit order. So for me, still be inclined to be a seller of strength. Let's see what happens. Right, I think that's it for today. I think we're done. I got to wrap things up there. But good to get back into it again. Thanks for coming along. There's a reminder of the contacts. Any questions, drop me an email, david.jones@capital.com, @JonesandMarcus on Twitter, jonesandmarcus.com is the website. Follow Capital on YouTube, Twitter and Facebook. We'll do it all again this time next week, 2:30 next week. It might be the last one, or there might be another one after that. But have a good weekend and hopefully see you next week.